The Dow Jones Industrial Average plunged over 1,100 points on Wednesday, marking its longest losing streak in nearly 5 decades, as the Federal Reserve announced a cautious approach to further interest rate cuts. In its final interest rate decision of the year, the Federal Open Market Committee, FOMC, implemented a quarter-point reduction, lowering the federal funds rate to a range of 4.25% to 4.5%. This marked the Fed's third consecutive cut, but it came with a notable signal. Only 2 additional cuts are expected in 2025. This measured approach reflects progress in curbing inflation while balancing the strength of the labor market, as indicated by the FOMC's updated summary of economic projections. Fed Chair Jerome Powell emphasized a more cautious stance, highlighting that further rate reductions would depend on continued progress toward the Fed's 2% inflation target and sustained labor market resilience. As long as the economy and labor market remain solid, we can afford to be cautious, Powell stated. Despite signs of easing labor market conditions and a slight rise in unemployment, inflation remains somewhat elevated, necessitating a delicate balancing act. Powell admitted that the decision to cut rates was a closer call this time, but deemed it necessary to align inflationary pressures with employment goals. The stock market reacted sharply to the announcement, with the Dow closing down 2.5%, the S&P 500 losing 2.9%, and the tech-heavy Nasdaq falling 3.5%. The sell-off underscores investor concerns about the pace of monetary policy easing and its implications for economic growth. Amid the broader market turbulence, Nvidia showed signs of recovery after recent losses, while Micron Technology prepared to release its quarterly earnings. The Fed's cautious tone leaves markets grappling with uncertainty as they weigh the delicate interplay of inflation, employment, and growth heading into 2025.